Good afternoon, guys. Happy Sunday. It's that time of the week where we go through my watch list and hopefully you guys can get some ideas and form your own opinions. So we ended last week with gold at 2,500. Now I'll play a clip of me forecasting that before it was hit. So, you can call me what you like, but only real traders could see 2,500 coming on gold. I'm looking at the 2,500 level on gold as a target for the short term or the near term. So this leads me into my opinion on gold now. Now I stand by what I've been saying regarding gold being very, very extended. We're very far away from this 200 weekly moving average. So we are almost 30% above. We can see we're 0.06% away from being 30%, which is huge. So you can see last time we were very far away from the moving average. This was 28%. We did see a mean reversion. I mean, this is on the weekly chart, so yes, it does take a long time. So by no means am I saying that we're now just going to see gold crash down. That's not what I'm saying at all. It's just one of those factors that I'm accounting for when looking at gold. I don't want to start buying right up here at 2,500 and then see the market start coming down for mean reversion. So that's something that I am cautious of. However, if we can see price action back up a continued bullish momentum, whether this be we've had the break of this resistance and all the previous all-time highs, can we see a pullback and a retest and continuation? If we do see something like that, I would happily go in with a relatively tight stop, I guess, just under the previous daily low around here. So it would be around the 2,429 level. However, this brings me into my next point when we're talking about a pullback on gold is, are we going to see a deeper fade on gold? Whether we see profit taking or whatever it may be, something a bit more aggressive. Now, the reason I will mention this is because last time, in fact, if we just look at the history on gold here, reached all-time highs at this point, we faded to the downside. Then we broke and formed new all-time highs and faded back to the downside. Then again, new all-time highs, faded to the downside. And this keeps happening. So are we going to see a very similar thing play out? We'll have to see. I don't know. It's not my job necessarily to predict these types of things. It's my job to react. However, if we do see something like this, I would happily get gold a little bit cheaper, possibly around here. Maybe back at this sort of support level around here wouldn't be too bad. So it's something to look at. However, I am quite happy to sort of sit on my hands with gold and just watch it. It's like just because it's so overextended on the weekly time frame, it's not something I'm desperate to get into right now. So the watch list is very quiet this week, actually. We do have the Jackson Hole meeting on the 22nd to the 24th, which shouldn't be too market moving, but it will give us some insights. And actually, just while we're on that topic, let me show you the Fed watch here. So you can see the Fed watch has changed. It's been updated and it's now heavily expected we'll have a 25 basis point cut. Now the 50 is losing steam. A 50 basis point cut would be very aggressive and not very warranted in my view. And this seems to be getting reflected now on Fed watch as well. So essentially, we do have a 100% expectation of a cut in September. It's just a case of, what will it be? Will it be 25, 50? But yeah, leaning more towards 25. I've got a video out about that actually called Will the Fed Cut 50 Basis Points? Feel free to watch that. Anyway, still looking to get in my dollar NOK trade. So I've mentioned this multiple times, so I'm sorry if you're bored of it, but I had a pending order on dollar NOK right here on this weekly candle. I was tagged in, or the alert was tagged, but I was on holiday at the time, so I couldn't get in. I didn't have time. But in hindsight, I could have taken 5 minutes to just execute, and that would have been good. But hindsight trading is no good for anyone. It's not useful. So I am waiting to see if we can get this level hit again. Now we can see we've got this supporting trend line to the upside. We also have this resistance through here. So I think this is called an ascending triangle is what people call it, or, the cheese slice, whatever, the name doesn't matter. But it wouldn't be necessarily a bad idea to say we could potentially come up and see a relatively higher price before coming down. And that's what I would like to see, sort of a retest of this resistance, and then a break and a retest of this trend line would be ideal. But this is a position trade. This is one I want to hold into sort of Q2 to Q3 of 2025. So it's not an emergency, happy to wait. Now the NOK SEK, again, like I said, the watch list is quite quiet. It's just some more long-term positions, including the NOK SEK here. So essentially the NOK is very overvalued. The NOK is very undervalued. The SEK is very overvalued. There is room for the NOK to start gaining some strength Q4 into Q1 and Q2 of 2025 as well. So having said that, I'm looking for something. Now, I don't know really what I want to see here. The reason is because we're in a long-term downtrend. This is a daily time frame. You can see this trend line's been respected for a long time, since 2022. Now, we have seen this level of support get formed, and I was really interested in the support. However, this is a daily level, so I was thinking, this will take a bit of time to get to. Now, unfortunately, or fortunately, depending on which side of the fence you want to sit on, CPI came out, and we did see a huge wick to the downside. Now, it's really unfortunate because I wasn't watching this market at the time. And if I was, I wouldn't have minded executing here or having a pending order. But, it's one of those things. Realistically, I'm not sure that I would have been filled at that price. But yeah, it's just one of those things. So now I'm more looking to see if we can get a break and a retest of this trend line for a continuation to the upside. Not really looking to execute within this range that we've got here because, price could very easily respect this and come back down and start testing the support again, which I really don't want to see happen unless, I'm not in the trade, then I can execute down here. So yeah, it's one to keep on the list. Now, the euro pound is one that I've been very interested in for a long time. Now I was stopped out in the euro pound, which is really sad. So I was taken out. I entered way too early. I think I had a position something like this. However, the weekly time frame still looks great. So we've got this level of resistance throughout here at sort of the 0.86 level. 200 moving average has been rejected by this weekly candle, or last week's. I suppose actually it'll be 2 or 3 weeks ago now. The previous week's weekly candle failed to break higher, failed to reach the 200. So yeah, overall the price action really, really supports this position. Now we also have a very small thesis written for this one, so I'll read this out for you. The UK's stronger growth momentum in Q2 compared to the Eurozone, coupled with constructive medium-term forecasts for GBP. While ECB likely to remain cautious due to mixed economic signals, the Bank of England's rate cut has already been priced in, potentially leading to a correction in the euro-pound pair. The UK's political stability could lead to increased inward foreign direct investment supporting the pound. So the short-term forecast for this is 0.83, which is down here. So that's not too bad. So you can see my target was already down here at 831 or 0.831. So it's not too far away. So I wouldn't mind executing a short position here. The only thing I'm a bit cautious of is the 4-hour time frame here is still in a bullish trend. You can see the EMAs indicate bullish. We also have the daily time frame here where the EMAs are all very clustered together, and it looks like we were supporting price. And the previous, so Friday's daily candle here, was rejecting the 21 EMA. So I just want to see a bit more of a confirmation whether we can close Monday's daily candle below, or if we can come back up to this resistance and start chopping around a bit and then start seeing some moves to the downside. That would be great. But overall, definitely looking to short the euro pound this week at some point. Now, crude oil, I'll give a very, very quick overview on this one because I have a video on my channel that I put out on Friday, basically breaking this one down in some detail. So I want you to go and watch that if you are an oil trader or you're interested in trading oil, because this one has quite nice seasonality behind it that I think you guys might be interested in. However, long story short, looking for a very small bullish move into sort of October. And then once October the 13th hits, I'm looking to get into some short positions until early December. So essentially, I executed a long position. I was short on oil, actually. I caught a really nice short position around here. Now, this was taken live on stream again, but I won't cover that. So yeah, now we see a 50% pullback of this fib level. So yeah, just looking to capitalize on a potential move to the upside before a longer term trend to the downside. Now the next one, or the final one really, is the Australian dollar against the US dollar. Now, due to the robust July employment figures, particularly in full-time jobs, challenged the RBA's move towards easing. The Australian dollar is favoured over the US dollar due to valuation, rate differentials, and stronger economic conditions in Australia. Fed cuts, anticipation of Fed rate cuts could further support the Australian dollar against the US dollar. The short-term target is 0.68. So let's have a look at where 0.68 is. 0.68. So there we go. So we could be targeting somewhere here. So this is obviously the daily time frame. So what I'd like to see is a pullback. So you can see the hourly down here is very, very overextended. So I would like to see some sort of pullback here. And again, with the H4, it's very overextended. So the H4 looks quite healthy. So what I want to see here is these moving averages. I want them to swap. So they're still in a bearish trend to the downside. We want them to look more like this, where the green is above the red. So I want to see them switch here, and then a pullback, and then a continuation to the upside. So here we'd be looking to enter, have our take profit up at 0.68, a stop loss, possibly below these moving averages. Obviously, this is trying to predict where they'll be, but potentially around here. So we'd have a stop loss, something like this, to allow for just over a 1 to 2 to 1 to 3, roughly something like that. So yeah, that's essentially it for now. I hope you guys have a great week ahead. I hope you had a great weekend, and I shall be in touch very soon. You can obviously subscribe, like. If you want to follow my signals, you can click the link in the description. You can join the private Discord where I send all my trades in real time with full written analysis, economics, and chart analysis as well. So I'll see you soon. Thank you for watching. Like, subscribe, and I'm out.